Welcome back to the 13th lecture of this series, guys, and in this video we'll be talking about digital payments, which is going to be extremely short. So let us go back to this question that was asked in 2018 about the definition of legal tender money. Basically, if there is a transaction between two parties X and Y, if X offered a service to Y in India and Y is giving money in the form of rupee, then X cannot deny that. It is mandatory for him to accept it. Suppose if it is given in the form of dollar or any other currency, then X might raise an objection. So the legal sanction given to rupee makes it a legal tender. And who has this power? RBI has this power. Now, why is this considered as a legal tender? Because there is a sovereign backing. A body which is created by the government is backing that currency. That is why it is a legal tender. Now, similarly, if digital payments are to be accepted in our country, there needs to be a law or a sovereign backing to that ecosystem. That is provided by this law, which is called the Payment and Settlement Act of 2007. Today we have a lot of digital payment modes. Let's say we are talking about internet banking, we are talking about UPI, we are talking about Paytm, etc., etc. All that is possible because of the powers that RBI got from this Payment and Settlement Act of 2007. So RBI, through this law, regulates what we know as the payment system operators. This entire ecosystem is called the payment system ecosystem. And as far as the current affairs is concerned, the context of this theme is that UPI is now the largest retail payment system in the country. In fact, UPI is such a successful model that it is being replicated across the world and is hailed as a role model for financial inclusion in a lot of countries, including the US. So, another fact that we have to remember is when it comes to the volume of transactions. India is at #1 position. We are the world's fastest digital adopters. Remember this fact, and we achieved this feat last year. So we were talking about the payment system operators. Let us have a look at who those operators are. Let's say you have an ATM. An ATM is operated by different entities, banks. Sometimes themselves carry out all the management of the currency, loading them, unloading them, maintaining the machine, security for that ATM machine, everything is taken care by the banks. Similarly, if non-banks carry out these operations, then it is called a white label ATM. Please remember that. Both these kind of ATMs are within the payment system operators ecosystem. Now you have prepaid payment instruments. Like say for example, you have a Paytm wallet. Now you have UPI which is joining them together, but in the initial days, if you remember, in the initial days of 2015, 2016, when there were just mobile recharges, you deposit some money into the Paytm wallet and use it for different purposes. So that is how the prepaid instruments worked back then. Then you have payment gateways like Visa, RuPay, MasterCard. Different banks will be using these payment gateway services to integrate their customers through these gateways. Then you also have financial market infrastructure provided. We have this Clearing Corporation of India. Now those who are watching this series, where did we discuss about this Clearing Corporation of India? Please post in the comment section below. The next set of payment system operators we are talking about is remittances. Let's say you have a friend who is working in the United States and he or she wants to send money to India. How is that possible? Through remittances operators like Western Union. Remember, are third parties within the ambit of this regulation by RBI. That is, let's say third party applications like GPay. Recently there was a High Court inquiry into this, and GPay replied that it is not under the ambit of this payment system operations regulations which RBI enforces, because it is not a direct entity which is involved in this transactions, and GPay is just an app which is facilitating currency transfer from one user's bank account to another user's bank account. So it is not under the ambit of this Payments and Settlements Act of 2007. In order to remember better, let us understand the chronological events of this digital payments. So in the initial days when internet was just evolving, some banks came up with this internet banking concept. Now in order to facilitate this, all the accounts should be on one platform. That platform or that software is called the core banking solution of that bank. Let's say for example, you have RBI. RBI has a software called eKuber, which it connects with all the other scheduled commercial banks and private banks and all the clients it has. So if they want to carry out transaction, they have to be a part of this eKuber platform. Similarly, if SBI consumer or the depositor wants to use the internet banking facility and transfer his or her money to other SBI client or to any other client, there is the necessity of a core banking solution. This is what we know as computerization. If you remember, during the time of demonetization, there were a lot of articles which stated that the primary agricultural societies which were out of the ambit of RBI and cooperative societies which did not have this computerized core banking solutions were used as loopholes to divert that black money. The reason is there is no proper accounting, and without computers it is not possible to have internet banking system. So the prerequisite, the first step that you need to have is the core banking solution. Now once this is done, the internet banking facilities were rolled out across the country, and as the first initiation, RBI came up with certain facilities. They are called the real-time gross settlement and NEFT. So what are these? Basically, these are centralized payment systems by RBI, and depending on the requirement, the urgency, you can either opt for NEFT or RTGS. Remember, we are talking about this service when it was initiated. So if we use NEFT, sometimes it so happened that money was transferred after a few minutes or a few hours depending on the frequency of that bank. And similarly, when we are talking about RTGS, instantly it used to be transferred from one account to another account, but there is a entry barrier here. Only rich people can afford it because the minimum transaction is 2 lakhs to up to 2000 crores. Of course, they used to charge some amount for this. There is a fee and also service charge. That is, in the present times, there will be GST, service fee as well as service tax. Now, after a period, in order to further the objective of financial inclusion, the government felt that there is a necessity for an entity which will promote digital payments. So the National Payment Corporation of India, where 10 banks pooled their money to give the technical solutions or the softwares required for this objective of financial inclusion, was laid down. So this NPCI came up with an instant a service called the IMPS. Now remember, this is similar to RTGS, which rich people used to afford, but IMPS is for normal retail consumers like you and me. What happens here is up to 2 lakhs amount you can instantly transfer to the other person without having to wait, unlike in the case of NEFT. There can be a delay in NEFT, but in IMPS, which is provided by NPCI, it is instant. Of course, NPCI used to charge some amount for this. So to see how this has helped the entire ecosystem of digital economy, you will see that even RBI had to upgrade its services. In 2019, RBI gave an update that these services which used to function just in the banking hours will now work 24/7, just like IMPS. So this is how the progress was seen as far as our digital economy is concerned. Now let us see the developments further in detail. 8th November 2016, this is when the government announced demonetization. So a lot of digital apps came into the picture, the most prominent one among them being Paytm. When Paytm wallet was used, it was recognized that there is this problem of interoperability. Now let's say, for example, if there is cash in your Paytm wallet, we can send this cash to a beneficiary account at a small charge, but it is definitely not possible to transfer it from Paytm wallet to PhonePe wallet. So this is the problem of interoperability, and this is considered a roadblock to cashless economy, which is an objective. Why do we have to aspire for cashless economy? So it is believed that cash management, which is a major function of RBI, is a huge expenditure. If we go digital, that money would be saved, and not only that, it is also quite possible that we can track all the transactions, and therefore the problem of black money will also be addressed through this digital economy. Also, this was the aim of demonetization. Now, coming back to NPCI. NPCI started adopting a very innovative technology called the quick response code, or the QR code. Also, you have to remember that RBI recently gave a mandate that all the PPIs or all the operators who are using these QR codes should directly migrate to the UPI, which is the QR code given by NPCI, instead of using their own companies. We will be discussing about this in detail. Now, what is a QR code? Unless and until you are living under a rock, you must have seen this picture for making a payment of late. Especially in the times of the pandemic, for contactless payments, QR codes proved to be a savior, and that is why we have had huge increase in the number of transactions. So this technology was initially created in Japan in the early 90s. The unique feature is that it can store up to 4,296 characters, and you can scan it from any direction. That is why QR code became very famous. By using this simple code, one can scan and make payments, and this impacted our economy, and you can see clearly that we are way ahead when compared to China in the number of transactions that we carry out. Also, you can download from the Telegram channel that I will be posting in the comment section or in the description section here. These are NPCI's other initiatives, like you also have this Notch platform, or IMPS, UPI, Aadhaar enabled payment system, National Financial Switch, which is used by our ATM network, and then you have other initiatives like FASTag. We have already discussed in the previous video about e-rupee. I'll be posting that video link in the description box below, so you can download this and read peacefully. So some quick details about QR codes. Basically, there are three types of QR codes in our economy right now. You have the proprietary QR code. Let us say Paytm created its own QR code and used this to promote its own app. But we have discussed that there is a problem of interoperability, and therefore all the wallets were ordered to move to this UPI ecosystem. UPI ecosystem is Unified Payment Interface. You can scan the QR code and pay to the other person, or you can use a unique payment identification ID will be there for you. You can use that ID, just type in that ID and you can make a transfer to that person directly. It will reach his bank account. You all know this. But what a few of us might not know is the third kind of QR called the Bharat QR. Again, this is brought out by NPCI with the help of Visa and MasterCard. Now, why did it take the help of Visa and MasterCard? Let us understand here. Normally, when we are talking about UPI, it is because we have money in our bank account and we can directly send that money from our bank account to the other person's bank account. Now, it can happen that the other person can be a merchant who is carrying out a business, and you are supposed to make a bulk payment and normally use your credit card. There is no money in your bank account, so you will be using your credit card. But the problem is UPI will not accept credit cards. What should you do? This is where Bharat QR comes into the picture. Now, for every credit card, the bank which is issuing this credit card will make an app where there is a QR scanner for this corresponding credit card. So this is called the Bharat QR enabled app of that bank. That bank will have a scanner, and merchant will also have a Bharat QR enabled QR code. Now what is the incentive for the merchant here? Let us understand. There is something called the POS terminal. You see that machine, right? The credit card swiping machine. Every time they use that, they have to pay certain charges. Now, if you use a QR code, there is absolutely no need to pay any money. And second advantage is this POS terminal costs something between 5,000 to 12,000. To save that money, merchant would prefer a QR code definitely. Now, what is the incentive for the user? Let's say, for example, you want to pay through your credit card and at a later point of time pay that credit card bill. So for that, Bharat QR code will be there, and you will use this QR code which is there in the bank app, and it will scan and it will pay to the merchant. Additional details from the data analytics perspective is that this Bharat QR code will capture all the merchant transactions, and all the merchant details will be there in that. So what is the difference between this Bheem, which is a UPI based app that is created by NPCI? Remember, don't get confused. UPI is like a platform or a software architecture, and Bheem is the app that you can download from your Play Store or Apple Store. Both are created by NPCI. Anybody can use UPI's technology, but the app itself which uses this UPI by NPCI is called Bheem. Similarly, what is the difference between this Bheem app and Bharat QR? Like I have told you, Bharat QR is for card payments, and Bheem is the dynamic person to person or person to merchant, where you have money in your bank. It is a dynamic transaction. But when it comes to Bharat QR, card payments are enabled. So this is actually helping Visa and MasterCard. That is why they want to invest in this. So this is the difference between Bharat QR code and a normal UPI. Both are brought forward by NPCI. Please remember that. Now another news that you want to know is the new umbrella entity that RBI wants to promote. This is a news from 2019. Now remember that all the innovations till now are brought forward by a company called NPCI. You need to know that monopoly is not good for any good business, and therefore RBI wants to promote another umbrella entity which can parallel NPCI and come up with new technologies. So that is why RBI has called for new umbrella entities. Now it is interesting to see if we can have more NPCI like organizations which come up with better technologies for financial inclusion and financial services. That is the development. There is no progress on this front. Just to mention what umbrella entity means, you need to be aware of this. Now let us talk something about cards. Cards, as you know, can also be called as plastic money because they are made out of plastic and they are equivalent to money. So they can be a credit card or a debit card. Recent update with respect to this is RBI has mandated that all the cards should be of the EMV type. EMV type means nothing but Europay, Master and Visa card type. Basically, they will have a chip with an encryption which is much more safer than the normal previous cards which were considered to be magnetic type, and all the details can be captured through some fraud measures. For more safety, RBI said that all the cards should be migrated to this EMV type. Now, these cards can be contactless or contact, but it is not important to go into the details. The next thing that you have to know is card tokenization. Now, when you make an e-commerce transaction, it is quite possible that the platform like Amazon can capture all those card details and mine that data and create some advertisements based on your financial transactions. So this is basically an issue of data security. Except for payment gateways, nobody else is authorized to have these details. So to solve this problem, the proposal for card tokenization was actually initiated by RBI. What happens here is The next time you go to a platform like Amazon and carry out a transaction, the 16-digit card will actually have dummy tokens which is created just for that particular transaction. So this gives data security, and this can be created by you itself through an app or through certain technology which would create this token. So this tokenization will ensure that data safety. So this is the latest development on this. Two more developments is the National Common Mobility Card and the Payment Regulatory Board. Let us talk about this NCMC, which is brought out by the Ministry of Housing and Urban Affairs. Basically, this is a card which is brought out by the Bharat Electronics Limited along with NPCI, and it has three components. The NCMC component is actually issued by banks directly. So it is nothing like a different card. It's simple debit card which can be used for metro or your suburban railway, toll, parking, or even for your own shopping. So this is the normal NCMC card. Like you have this Amazon Pay ICICI credit card, right? It is also similar. Now there are two more components, Swikar and Swagat. So Swikar is nothing but the automatic fare collection system. Just tap it at the entrance and it will collect the fare. So this is for fare collection. And when you're talking about Swagat, it is nothing but it is an automated gate at a railway station or a bus station. It is nothing but a automatic gate which will let you in and block access. Also, there is something about the Payment Regulatory Board where RBI is thinking about creating a new structure. It is not yet finalized, so let us not dwell into the details of that. The final thing that we have to understand here, merchant discount rate. We already talked about the POS machines. So this is the rate that a merchant pays to the banks for using this POS machine. Previously, this used to be one of the biggest roadblock for people to adopt this POS machines. But after demonetization, up to 2000 rupees, it is made MDR free. That is, MDR will be 0%. And there was certain other announcement made in the budget depending on the turnover. Like say for example, if the turnover is somewhere around 50 crores or greater, MDR is exempted for them. It is not important to remember all those details from the budget. Just understand this concept of MDR. That is enough. Another important development is the Payments Infrastructure Development Fund. Basically, you can see that if urban areas themselves have a lot of resistance for taking this POS machines, rural areas will definitely have it. So this fund is created to subsidize those who are interested to buy these POS machines in rural areas. Now, who will be the biggest beneficiaries of this move? Obviously, the banks and the payment gateway operators. So they themselves created this fund for development of the ecosystem in the rural areas. That is the objective of this PIDF. Just remember this. Another important measure by RBI is the creation of this digital payment index. After the year 2018, we have seen a huge upward trend in the digital payments in our country, and a part of that is because of the 2016-17 demonetization move, and after that the COVID pandemic has helped us even further. So this will have a set of parameters which will help us understand which geographical areas have less growth when it is concerned about this digital payments. So RBI will focus on these low growth areas and take up steps for increasing the digital payments in that area through certain incentives. This is the concept of digital payment index. This is not by Niti Aayog, just remember this is by RBI. And the final development of this video is the digital transaction ombudsman. Basically, RBI designates RBI officials as ombudsman when it concerns about the digital transactions. I mean, like there can be a problem with an app. Let's say you are using Paytm and the payment failed, but Paytm is not responding. How will we have a redressal of this grievance? For that purpose, ombudsmen were created. Now, RBI designated almost 21 RBI officials as ombudsmen across the country, and if the consumer or the person who is facing this trouble is not happy with the response, they can appeal to the deputy governor of RBI. That is the entire framework given as far as this news is concerned. Now let us look at some important information given in economic survey. The first country which used this BEAM app was Singapore. After that, even Bhutan adopted it last year. But that is not the important news. Bhutan became the first country to adopt the standards which were laid down for UPI for its own QR code. And the second victory that we as a fintech hub had is with respect to the achievement of NPCI International Payments Limited, or NIPL. This is nothing but NPCI's international wing. So it so happened that it joined hands with Gateway Payment Service, which is nothing but a Nepal based service provider. Just like NPCI for India, there is one company in Nepal also. So NIPL is actually executing that project. So Nepal became the first country to adopt India's UPI system as it is. Bhutan just used the standards and the BEAM app, whereas Nepal actually adopted the entire UPI system and wants to replicate that in their country. So this is the big news that is given in our economic survey. I hope you found this useful. If you did like this, please like, share and subscribe. It will also help me in the YouTube algorithm and help me reach out to the more number of people. That's it for now. Thanks for watching.